Hey guys, RC Peck here with Fearless Wealth. I want to look at what you're looking at on the screen is pretty confusing. So I want to take a step back and tell you what it is, and I want to talk to you about why I'm looking at this and why I think it matters. First of all, let me just clean up something here. Let me get the thumbnails off of here. So if you look at the screen, there's three price charts. The two top price charts are yields of US Treasuries. So the top price chart is the yield of the 30-year US Treasury, and the middle price chart is the yield of the 10-year Treasury, and the bottom price chart is the S&P 500 index, no dividends included. And I put these bars in before this year happened. So I put these red sections in at the end of 2019. I talked about how this is going to be important support. And same thing here with SPX. So the thing I want to point out is the yield on the 30-year is going higher. If you can see this, it broke above this really important kind of 1.4%. And I believe it wants to go back up to this red zone, which is right around 2%. It's a zone, right? It's a support and resistance zone. So I believe the 30-year yield wants to go back and test out that 2%. Now, that doesn't mean the 10-year has to go higher, which is the middle chart, because if you can see this, the yield on the 10-year hasn't broken out to the upside yet, but the yield on the 30-year has. So the US government has less control over the 30-year yield as it does with the 10, right? The shorter the shorter the time, right? So the Fed controls overnight rates. And so the closer the yield gets to that 1-day rate, the more the Fed can manipulate. Now, look, the Fed can manipulate whatever it wants. It can start buying 30-year treasuries. Heck, it's buying corporate bonds. At least it said it was buying corporate bonds. But what I want to point out is the S&P down here is above this danger zone. So for those who want to have a line in the sand, if the S&P index is above that red zone, then whether you believe it should be true or not, whether you can believe it or it ought to be, it is. And it's moved above it. And it's hard to be bearish on the stock market. In fact, I don't think you can if this black line, which is the S&P 500 index price, is above this red support and resistance zone. And the fact that the 30-year yield is moving higher is telling us that it's very likely the S&P index is going to get back to its its February highs of this year, or at least it's going to test them. Now, I talk about this in context of looking at this screen here. So this is the NASDAQ 100. This is the 100 largest companies in the NASDAQ composite. And I'm dividing this by the bond market in the US. So literally I'm pricing the NASDAQ 100 in US bonds here, or the US bond market index. And again, it's the same thing. If the black line is above, let me again clean this up. Oops, sorry about that. I hit the wrong button here. Let me just clear those guys. If the black line is above this green resistance, right, above it, that means, again, you have to be bullish, because this means that the NASDAQ 100 is outperforming the bond market. Now, if that's true, that means the price of the NASDAQ 100 is going up faster than the price of bonds in the US. And if that's true, that means more people collectively, those 400 or 500 plus million people, say, okay, there's absolutely horribleness going on right now in the United States. And I'm going to talk about that in a separate video. But I want right now, I just want to talk about price. Not out of the context of just the horrible stuff that's going on, but to say, even when there is horrible stuff, and I'll do a future video on 1968, the market looks forward. The stock market looks forward. It doesn't look down right in front of its feet. It looks forward. And this is a good, strong case that the market is looking forward and we're going to figure out how to get through this. And it was Scott Galloway, and I love this guy. I have a boy crush on him. I'm a fanboy of Scott Galloway. He said everything that's wrong in America can be fixed with everything that's right in America. And I do believe that. So I'm having this video to you, not I am very clear about what's happening. Um, but I want to point out to you that from a price point of view, the Nasdaq 100 is definitely outperforming the bond market. Okay. The other thing I want to show you is this is the S&P 500. Looks different than the Nasdaq 100. And look, the black line, which is the S&P 500 with dividends included, by the way, is pushing through this messiness right here. It's pushing through it to get up to this clean air. And you can tell once it gets up to this clean air, it's still going to have stuff that it's going to have to work through. But this price of the S&P, or the S&P priced in bonds, is clearly also moving higher. In fact, it's accelerating higher. And so it's going to be interesting to see what happens to the S&P when it gets up to this clean air. I want to say one or two more things, and then I'm going to hit the pause button. And let me go back to what I want to talk about. Gold is at about a 7.5-year high when you look at its monthly closing. So the month of May ended, and gold on a monthly chart closed at 7.5-year highs. So that's a pretty bullish statement. And it's sitting right above some pretty major support. So that's on a bullish note. Interesting about XBI. XBI is one of the ways that you can measure the biotech sector. And this last bar here is June, but biotech closed at its highest ever on a monthly basis. And the interesting thing about biotech is it goes sideways for many, many years. It goes sideways for many, many, many years, and then it breaks to the upside. And then it goes sideways for many, many years, and then it breaks to the upside. It attempted to break and did break to the upside in 2018, but then came back down, and it just made a new monthly lifetime high. So that is a sign of strength. New highs, especially when measured on a monthly, is never a sign of weakness. This is XLK. Apologize for all this extra stuff down here. We don't actually need to have the stuff below here. XLK also closed at a monthly lifetime high in May. So you have the strongest and biggest sector of the market closing at monthly lifetime highs. You have gold closing at 7.5-year monthly highs. You have biotech closing at lifetime monthly highs. So those are all signs of strength. Now I can put TLT in here, which is a way to measure the bond market, and it did not close at lifetime highs. In fact, it closed down this last little. Let me just zoom in here. There's I don't need to be showing you 15 years of data here, guys. It's nice to see that. But so here is June. This is June, and TLT closed down, which makes sense because I told you that the 30-year yield is going up, which means the price is going to go down. So it's very likely that treasury prices are going to fall, and it's very likely they could fall down to this, at least from a TLT, down to 145. And it closed, May closed out at 163. So we could see in price a drop of about 12% in bonds. And then the question is, does it find stability here? So bonds falling, bond prices falling, is also bullish for stocks. And then I'll just do one more. Sorry, this is the dollar index, and I'm going to stay zoomed in. And the dollar closed down in June. So it had a lower close than it did in April, and that it did in March. And then you can see these months back here. So the dollar is also falling down. This will be good for small caps. And this is actually good for all US stocks, because the cheaper the dollar, the more other people will buy US stocks, US products, which gets US stocks. So the market's moving higher. my goal or suggestion to you is that you don't continue to try to look for why it makes sense. The market looks forward, it does not look down. Even in the horribleness of 2020, 2020 is definitely going to go down as, unfortunately, one of those years. Right? It's going to go down as a 1968. And I've talked about 1968 many times, and I'm unfortunately going to have to talk about it again. I'm pretty saddened by what is going on. We have a leaderless, the US has a leaderless country right now. In 1968, we killed all our leaders. Well, we killed MLK Jr. and we killed Bobby Kennedy. We killed JFK in 63, if I'm getting my dates correct. But the 1960s was a pretty horrible decade. So I'm going to talk about that more in another video, but I wanted to get this to you just to kind of show you. I don't want you to be thinking what makes sense. That's not actually how the markets work. Um, I have this great free training called the diversification myth. I think I'm going from memory. It's probably about 15 minutes. It's awesome 15 minutes of just showing you how you could be hurting yourself. You can find that link at the top of the comments. And if you're not a subscriber, please go ahead and subscribe to my channel because it helps. Please forward it. Please leave comments. Thank you for being in my world and stay safe. And I will speak to you soon. Okay.